Hello, everyone, and welcome to another webinar by Timber Exchange. And this webinar is going to be a very, very special one indeed. And this week's guest is Canfor's own Director of Market Intelligence, Mr. Chris Leftis. And now, let's get to it. A warm welcome to Mr. Chris Leftis. Hello, Chris. How are you today?
Good. Thanks for having me, Amir. Looking forward to it.
Absolute pleasure. Thank you so much for coming on. It's going to be really, really interesting to discuss the North American lumber market, but also the global lumber market.
Again, thanks for having me. And I've been looking forward to the opportunity for a couple of weeks now. And so today, we'll primarily focus on the North American market, with definitely a hyper focus on sort of the U.S. dynamics and the trends there, but certainly willing to hit on the international backdrop and recognizing the truly global marketplace that we're in the softwood lumber industry. Here.
Yes, Chris. So we all certainly know of Canfor, but I think most of us don't understand how big Canfor actually is. So can you please describe that for us?
Yeah. So absolutely. So Canfor currently sits as the second largest lumber company or softwood lumber company globally. In 2022, we hosted just over 6 billion board feet of softwood capacity across the global operations. And I've kind of given you a map here just so you can see sort of the breadth of operations that we have, spanning across North America and obviously into Europe with the Vita acquisitions that we have there. But interestingly enough, we are a vertically integrated organization across our global footprint, with our fiber utilization at nearly 100%. It's really important to us that we continue to develop our sustainability platform and really work towards that future of the most responsible way to expand possible. And across our operations, Amir, we really focus on the value added products across those operations, and really to get the most value for the precious resource that we harvest. So just a little bit further on that, I do want to talk a bit about the growth and diversification of our lumber production. If I look back towards 2013 there, that was really the height of our Canadian SPF business at about 4.2 billion board feet annually. But as you can see, moving forward, we've executed on a vision and something that, as an organization, we pride ourselves on, which is really that diversification of supply. So as we move into 2022, there, you can certainly see that we've rebalanced and we have this truly global dynamic to our supply basket, that something that's very important to us.
Super interesting indeed. And speaking about the North American lumber market, it's by far the biggest market for lumber in the world. So can you please tell us, what does it consume, where, and for what sectors?
Looking at the U.S. softwood lumber market, we're about 52 billion board feet in the year 2022. So about 82 million cubic meters consumed in 2022. And when we look across that basket, you can see there on the pie chart, sort of, these are the major demand channels that we see. And I think the interesting part to highlight here is you have 74% of this demand is in either new housing or that residential repair and remodel. So those are sort of the two key sectors, if you will, and then further backed up by your industrial and then your non-residential sectors. And then to the right of the slide there, I've highlighted for us sort of that regional demand. So the larger number is obviously billion board feet there, and then just below that the cubic meter values. But as you can see, a lot of that demand in the United States sits within sort of that southern part of the United States, or that southeastern part of the United States, at 21.2 billion board feet. And we think that that's likely to continue being the case, right? We're seeing migration patterns, certainly from the west coast of the United States into Texas, as well as from the Northeast down into the more southern United States, into Florida, South Carolina, places like that. So something that we certainly see, likely to continue going forward. So, just another way to look at this, I wanted to highlight sort of the sector trends for you over time, breaking down again those same key segments as we look forward to, and going into 2023. I think the thing to highlight here, and what the key takeaway is sort of that yellow band there, that growing exposure that we have to that repair and remodel segment, and something that we think, fundamentally speaking, is going to continue growing its share over time. is definitely something that we're watching closely. But as you can see here, looking into 2023, we definitely see demand sort of normalizing, if you will, coming back down off of that sort of extreme levels of pandemic demand. And so going into 2023, we're forecasting around 47 to 48 billion board feet for the U.S. market. And just as we see, some of those affordability constraints that we'll talk a little bit more about.
Super interesting. And the key segments are in the U.S. housing and R&R. So how are those doing today, and how are they expected to continue?
Yeah, for sure. So I think we'll talk a bit first about the repair and remodel side of things. The backdrop, fundamentally speaking, for repair and remodel remains really, really strong. I think one of the things that we've been hitting on a lot lately is sort of that age of the housing stock, and breaking that down. And as you can see here, you've got 53% of the U.S. housing stock is 41 years or older. And just for some context, most homes in the United States, and single family homes in particular, after about 30 years, there's that need for pretty significant renovations to happen. So, with, more than half of the housing stock sort of in that age bracket, it's prime for that really repair and remodel. And so what we're seeing there, we think is necessary. It's sort of a sustained demand channel for us, and something that we think will continue. So if we look at, the other piece here that's interesting is 58% of homeowners in the unit less than 10 years. And so what we mean by that is homeowners tend to move in. They're there for a while, and then you start to see these, upgrades that happen to the unit that they're in. So with those relatively low tenure rates, we think that as homeowners continue to age inside of their existing units, we'll again see a sort of a push from that. So the backdrop remains particularly positive, I think, for R&R. And I think another way to look at this is something that we've seen here recently. And that's simply that moving up right now in this current structure, it's just not the logical thing to do at the moment. And so this is going to keep that sort of existing home inventory pretty low. And it's likely to induce that greater R&R spending that we're seeing. So just to give you an idea, if we look at sort of the existing homeowner today, the average tenure is around 13 years, and their average rate is at 4.2%. So more than 80% of current homeowners are below the average interest rate that we're seeing today in the United States on a 30-year fixed mortgage. And so we look at that median home payment and we say, okay, roughly $1,200 for the existing homeowner today. If they were to move up or sort of even just trade for like and take on the new interest rate today, that median payment increases by around 66%. So obviously that decision becomes significantly more difficult to make, to say, okay, yes, we want a new home. And so what it does, we think, is it sort of perpetuates this idea of we want to, just invest in the existing unit we have. And so again, provides that really pretty positive backdrop, I think, for repair and remodel overall. And so, I think to round out some of those ideas and concepts, here I present you with our seasonally adjusted forecast for repair and remodel spending in the U.S. And this is along with the gray line there that shows you the estimated estimated annualized consumption pace there. And so, as mentioned, the fundamental backdrop remains sound with the age housing stock and those increased tenure rates. It's the erosion, though, that we're seeing in household finances that's due to that well above average inflation. And this is reduced what we call sort of that household wallet size. So think of it as that the entire wallet for the household is sort of shrinking. And so we like to think of R&R in the terms of share of wallet allocation. So how much of that household wallet are we willing to sort of allocate to this R&R? And past studies that we've done have shown that in periods where that house price is outpacing inflation, so house price growth is well above core inflation, we see that the median household tends to have this higher propensity to invest in their home. So they're thinking, okay, my home's increasing in value, I feel comfortable making that investment. And so they sort of allocate that greater share. So I think the concerning part as we move into 2023, maybe even into 2024, is that that wallet is certainly relatively smaller than it was in 21, 22 with that pent up savings that we're seeing. But at the same time, if we look at house price growth sort of stagnating, we've got a smaller wallet, and then potentially this lesser, concept of that share of wallet going towards R&R. So it's a little bit of a double whammy there, in that we see, again, declining house prices, or maybe even just stagnating house price growth, and so that propensity to consume there maybe isn't as strong. So looking at 2023 in particular, we did forecast a relatively strong start to the year, which we feel like we've seen, in the home center indicators and things like that. But what we do project is that overall we'll see about a 5 to 8% demand decline. It could creep into the 10% range versus the 2022. But again, I think it's important to highlight that's coming off of very, very strong years. So we see that annualized pace still maintaining at about 19 billion board feet, or around 30 million cubic meters going through that period. So I think just shifting over to the U.S. housing piece and discussing that backdrop, just to keep answering your question there. Looking at the total inventory across, we see critically low inventories, and I think that it's important that we reflect on this inventory situation across the U.S. As we communicate the idea of this slowdown in housing, it's important to remember that when I think a lot of us immediately go back, we hear slowdown in housing. Okay, this means 2008, 2009. This is a housing crash. And I think that's just recency bias kind of creeping in on us and things like that. But the housing market does slow down without crashing. And I think it's important to highlight some of the fundamentals that will sort of stop that 2008, 2009 type of correction from happening. I think, overall, if you look at that red line with the dots there across, you can see that the 2022 inventories sort of on a monthly basis remain well above sort of those dotted lines at the top. So the dotted lines are 2005 and 2009. And so looking at total inventory, we're not even close to that same level that we were, that sort of created the situation that we saw in 08 and 09 that resulted in that. So, we've got more room to run inventory wise. I think it's just a matter of tapping into sort of that latent demand piece that we have there that's important. And so kind of teasing at that a little bit more, when we look at our internal analysis of Census Bureau data, we like to look at electricity consumption as well. We think it does a better job of actually tracking household formation on a higher frequency basis there. I use the term underbuilt though in a rough sense, in that it's demand for housing has to be supported by concepts like affordability. But if we assume roughly 1.6 million completions in 2023, which by the way would be a significant feat, the market still remains underbuilt by about 2.5 million units. So I think, again, the trick here to this underbuilt scenario is the ability to actually release the latent demand associated with this. So this comes in the form of ensuring that affordability is in line with whether it's through interest rates or home prices, home size, or really a combination of those factors. But looking forward, it's the underbuilt scenario along with projected household formation. We think this requires about 1.7 million units annually. But again, the question is, can we actually release that level of demand? And I think to put things into perspective, the levels of demand that we saw in 2020 and through 2022 there, they were supported by the release of demand across the spectrum of demographics and income levels. And so just to hit on something there, like as an example, during the height of the pandemic, households that were in the bottom 50% of income earners in the United States increased their real estate holdings by 30% year over year. So like when we achieve those higher levels of housing starts that we saw, we've released that entire spectrum of demographic. And so that's what we truly need to sort of get to that level and understand that. So, I think if we tease at the affordability piece just a little bit more here, this is a look at Canfor's proprietary National Home Affordability Index for the United States. In this view, I actually broke it down into a couple of key components for you. And I think this is where we differ a little bit in our affordability analysis from others. So first, if we look at the red line, that's the monthly payment index. So essentially, this reflects the question you ask yourself: can I afford to make this monthly payment based on this mortgage rate? Can I make this payment? The second gray line there reflects how long do I need to save to make the down payment on this unit. And so we look at these two together and also independently. And so as you can see over time, since 2000, they've really trended together. We see them, sort of trend in that exact same fashion. And what's been interesting is during the pandemic and during the past couple of years, we've actually seen this sort of change. This dynamic has changed on us. And going forward, we are actually seeing this diversion in the two factors. And so, I think that when we look at this, that's what sort of confuses this backdrop of looking forward at 23 and maybe even into 24 is what we expect for housing, because we don't know. Is it simply that monthly payment index that is the high impact, or is it the savings required that also backs it up? I think our analysis here has showed that it's really the combination of the two that has the highest correlation with total home sales and new housing starts. I think it's our opinion that we need both of those factors to sort of come in line. But I think what's interesting here is too, if you look at 2020, 2021, you'll notice that the pandemic really quickly became one of the most affordable times in history to purchase a home in the United States. And so this is large in part due to that favorable interest rates and really this dramatic increase in household savings rate. And so this allowed individuals to save a significant amount of money. And just to be specific about this, the US households generated about $1.6 trillion in excess savings during the pandemic. So 1.6 trillion in and above what they normally would have saved. And I attribute that to the I can't go on vacation effect. That's what I like to call it, or the can't spend $200 on Justin Bieber tickets today. And so that type of thing it created this household savings, and that triggered people to go, wait, okay, I can make this down payment now. And oh, by the way, I've already been making this apartment payment here, so why not just put it towards a mortgage? And I think that's what we saw that really shot us up to that 1.6, 1.7 sort of annualized pace, if you will. So two, I think interesting to highlight sort of the interest rate sensitivities that we're seeing. The gray bars that you see here highlight the number of households that can afford the median priced home in the United States in different interest rate regimes, if you will. And so if we look sort of at 3% as the baseline, let's call that what we had sort of a last year type thing. Now, as we shift forward and we look at 6%, we lose 18% of the buyer pool, of that would-be buyer pool as we get into 6%. And today, we're again already approaching 7% interest rates. And so we've lost at this point in time about 29% of the would-be buyer pool. And so I think if you look at some of the year-over-year indicators as well, like mortgage applications for home purchases, things like that, we're seeing that those are down again 20 to 30% year over year. So it's really this interest rate sensitivity that's playing a big role here. And I think too, another way to look at this is if we were to drop the price of a new median home in the United States by 15%, we just dropped it 15% today, we would gain back 33% of our buyer pool, or nearly 10 million households. So you can see it's a game of percentages here. It's a game of margins. And I think once we get that affordability back in line, there's really strong demographics that we can sort of release. Another interesting piece that we've started picking up on recently is and I like to think of it as a particularly unique opportunity for the industry overall. When we look at new and existing homes, so this chart shows you the price per square foot of new versus an existing home, new being in red there and existing in gray. So you can see, over history, we've sort of had this natural spread between the two, new home, incrementally more expensive. we sort of saw that spread start to tighten a little bit even pre-pandemic. But then the pandemic hits, right? And we actually see an inversion in this for a period of time. Now, that corrected itself. And I think that was while building products were on the way up and they kind of hadn't quite hit. But nonetheless, this remains really tight, right? This dynamic has changed. And so I think, generally we've got this unique ability to channel a lot of this would-be demand into the new home market. So as that existing home, they have those ultra low rates we've talked about, and they're sort of in this rate lock scenario. There's this idea that we can unleash this demand, and it gets channeled heavily into new homes. I think, which is a generally positive thing for us. So to round this all out, you can see here, this is our view on the underbuilt piece as well. If we look, back at the early 2000s there with that 2 million surplus, and then really followed by the greater part of the decade underbuilding, creating sort of that deficit that a lot of us talk about today. Now, with the onset of the pandemic and the aforementioned sort of affordability backdrop being favorable, we saw the increase to starts hit that sort of latent demand level that we would have expected. But moving into 2023, we do see housing starts probably in that 1.2 to 1.3 range. I think for me in particular, the troubling piece and something that I think we have to contend with over this, sort of lull here that we're approaching is that it's the drop in single family. If you look at that drop there, and I think that the troubling piece there is the U.S. single family home uses 3 times as much lumber as the average multifamily unit in the United States. So that drop in particular, I think, is troublesome for us. And it's the overall picture of affordability that's creating that issue, because when we look at the backdrop, you've got those millennials coming of age, you've got the increased 10-year rates, things are strong there. But we need that affordability, we need that economic and that geopolitical landscape to sort of normalize and come back into line. And that's when I think we'll start to see some performance in housing. So I think, going to this year, we remain pretty bearish on the outlook. We do see some improvement likely happening in 2024. And then I think cyclically over the long term, definitely a very strong outlook.
That's quite an analysis, Chris. Super, super interesting. And it's interesting to see and understand the underlying data, actually, because that's very, very important. On the topic of homes and lumber and construction and so on, is Canfor making Southern Yellow Pine studs? And is there a market for SYP? And how does it compare to your SPF or SPF imported from Europe?
For sure, yeah. So that's an interesting one, right? So I think I've got a slide in here, and we can definitely touch on that here in just a minute. So that was good segue. We'll kind of go into maybe just some global supply considerations and sort of what the U.S. market looks like, as it's a bit of a melting pot of supply channels. So if we look at, I think, U.S. supply in general, in 2022, we were around 53 billion board feet, around 82 million cubic meters there. And I've highlighted for you the share that each of the regions sort of contributed to that U.S. supply basket there. 14% out of the Western Canadian supply basket. But again, 42% of that supply in the United States sort of coming from the U.S. South there. And so I think, generally it's a competitive region. And I think looking at the U.S. South in particular, you see that exposure not only to the eastern seaboard, but even into the Gulf there, that exposure to, volume from Sweden, that exposure to volume from Central Europe, Germany, Austria. And so truly, I think a diverse backdrop there. But, Amir, to hit on your question around the 2x4 piece, when we look at the U.S. South capacity outlook, one of the things that we're noticing is that these mills being built today, especially the greenfield mills, and even some of the capital investment that we're seeing across the industry in the U.S. South, is pushing forward this idea of more 2x4 production. And I think it's definitely, in relation to the falling the falling supply out of Canada, with regard to the 2x4. I think today, does Canfor make an SYP specific stud that we market into the stud Not necessarily. We do have finger joint studs that we produce out of Marion, South Carolina. Definitely a great product for us, and something that makes its way into framing applications. Generally speaking, I think that we'll see this natural shift that will have to happen, right? If you see this high demand for housing, you'll see a shift into utilizing southern yellow pine in framing in a greater capacity. And I certainly think the industry's recognized that. As you can see there, we're projecting about a 57% increase in 2x4 SYP production across the entire southern yellow pine basket there. So it's a fairly significant increase, and I certainly think, again, aligned with the idea that Canadian volume is falling. And as you can see here along the bottom, just really, really aggressive growth patterns out of the U.S. South there. And I think something that, may moderate here in the near term, but there's certainly opportunities that exist in the U.S. South.
Super, super interesting. And what is Canfor's view on the mountain pine beetle and the overall timber supply bottoming out in BC?
Yeah, for sure. So I think I've got that built in too. I was going to talk a little bit about some of the curtailments that we've been seeing, obviously in relation to that pine beetle piece. I think if we look at, this is just very recent, this is a look at late 2022 into early 2023. We estimate these around 1.5 billion board feet, about 2.4 million cubic meters. And there's, been some announcements as recent as last Friday. Generally speaking, we've also started to see some more indefinite or permanent curtailments happening in BC in particular. And we think that this is just that natural rationalization that needs to happen against the fiber basket there. In something that, probably further rationalization in and above what we've seen is likely required. But just a quick look here for everyone sort of at that curtailment piece and what we've seen, very recently here. Now, to sort of hit on your question there, Amir, I think for us, we've seen this interior reduction. We've seen the reduction from the pine beetle there. But I think, what we like to highlight here is that, again, we're moving away from that mountain pine beetle type fiber into this better, stronger fiber basket. And so, like we talked about earlier, that responsibility that we have towards our natural resource basket, for us, it's a focus on doing more with less. And I think the industry overall in BC is looking that way, right? As you can see, even though we're seeing that reduction, we're improving our quality. And so I think that's what's important with this, is utilizing that fiber in the most responsible way. And overall just being as innovative as possible as we go forward. But yeah, certainly seeing the reduction. We don't see that reversing, obviously, through this forecast period. But we're confident that we can really do a lot with the existing fiber basket that we do have.
And a very important topic that I think most viewers here today are also interested in is, how do you see North America's and Canfor's exports offshore? Are these markets important, and how do you expect the flow to continue?
Yeah, so on the British Columbia, I think offshore exports in particular, you can see obvious shifts that really are dictated by, I think, market conditions, right? The obvious proximity sort of BC to the U.S. market inevitably drives higher allocation when the U.S. market demands it, right? It's you're going to naturally divert wood into that market, or that's going to be sort of your go-to there. But as you noted, Amir, I think we recognize that the marketplace is truly global, and we recognize the importance of an international footprint and making sure that we have diversified markets. And so, I don't see BC or really any region for that matter insulating themselves from the global marketplace. I think we all recognize that importance, and it's definitely, I think for the industry as a whole, a pillar that we need to rely on to make sure that we're creating that proper marketplace going forward. I think too, just to hit on the U.S. softwood lumber exports in particular, going forward, we think this continues to probably hover around that 1.5 million cubic meters. About 1 billion board feet annually. As supply in the region increases, as wood adoption increases in places like the Middle East, North Africa, India and throughout that region, I think there's going to be opportunities for increased export. But given that strong demand backdrop that we're seeing in the United States, I think you'll always see sort of a natural cap on that offshore volume there. And then, just looking at the Canadian exports to the United States and sort of their market share in general, what we see, going forward is that Canadian supply to the U.S. is probably going to hover around that 14 billion board foot mark annually, about 22 million cubic meters. And, given the growing Southern Yellow Pine production that we see and increasing long-term demand in the market, you'll see that Canadian share of total supply in the U.S. sort of just naturally taper off. And so as we go forward, even though that supply may sort of level off, the share overall of Canadian supply, I think, will just come a bit lower.
Very interesting indeed. And kind of flip it around, what about offshore imports coming from Europe? Is this important for the US, and do you expect it to continue or decline based on the supply situation in the US and the demand situation in North America overall?
Yeah. I think for sure an interesting piece, and looking at 2022 in particular, obviously breaking a previous record sort of set there in 2005, and so looking at 4.8 million cubic meters of volume from Germany, Sweden, Austria, and sort of that other Euro area basket. And so I think we're of the opinion that European supply will continue to become maybe a more permanent fixture in the US marketplace, and remain at, I think, generally high levels across the board. I think we have to remain cognizant of the fact that Europe's battling the beetle issues of their own, and we could maybe see this decline in overall harvest levels in that area, and this might impact that total volume that we see over the medium term or longer term there. But we certainly, I think, recognize that Europe will have a significant place in the US market, and I think that too we recognize that as we see some of that volume come out of British Columbia and that heavy allocation to 2x4, that it's not unlikely that some of that European stud volume does start to take place of that over time. So I think it's definitely a real possibility, and we're assuming that sort of the European volume is here to stay and does play a big role in the US market going forward. Probably around the levels that they were in 2022 as a bit of a cap, if you will. And I think too important to remain that it'll be heavily demand driven, right, in the US. So where the demand is, I think you'll see the supply can facilitate. And so just to kind of round out that whole idea, Amir, and looking at the US supply outlook in general, I've just given you a breakdown historically speaking, just to kind of show you the context of changing trends over time. And you really just to tie this all together, our expectations of the US market in by sort of broader region here, I think generally speaking, we see the ability to satisfy demand over the next couple of years. We see that ability, being there, and the notable increases in production in the U.S. South, coupled sort of with that ability of Europe to supply the market. I think we will be able to supply demand over the next year, maybe two there, before we start to see some more some tighter supply and demand dynamics in particular. One of the regions that I'm watching in particular is sort of the Pacific Northwest. It's a bit of a higher cost jurisdiction, and I think it'll be interesting to watch as we see a little bit of a demand decline here in 2023 and a little bit slower markets, where we see supply decisions being made and where we see rationalization taking place. Is it simply a BC story, or is it more broad across the North American market?
So looking at the demand and supply situation today, how does it look? How does it affect the price, and what kind of short and long-term forecast do you see?
Sure. So yeah, let's kind of round it all out, I guess, with the supply and demand piece here. So just to give you a couple of charts here, I know these are just tables, but just highlight a couple of things here. in general. I think on the baseline, when we look at that analysis, we see the ability of the global marketplace to oversupply, if you will, the US market by about 4.8 billion board feet in 2023 in particular. And again, I think this is just that growing supply that you see out of the US South, a lot of volume coming online in 2023, a lot of greenfield mills sort of starting to ramp up their production pace. I think, we're projecting lower imports from Canada. We're projecting, a little bit lower volume from EU and sort of other regions. But again, I think that's primarily demand driven. So as the demand backs off a little bit here, we'll see that supply response from Europe sort of drop. Now, I think, again, even if we look at this in what we call sort of the sensitivity review and saying, okay, what if we took an additional billion board feet of supply from Canada into the US out of the picture? What if we took another 500 million board feet out of European supply? What would that look like? Again, still that really strong potential and ability to essentially oversupply the market. But I think it's important to recognize too, that's a near-term story, right? That's that affordability issue. That's all of those sort of headwinds that we have. They're going to manifest in throughout 2023. They're going to cause that issue. I think generally speaking, we're seeing this, just overall shift in the supply dynamics globally. We're in this period where we're still rationalizing in BC as an industry. We're still growing in the US South. Europe's going through its own changes. We're battling with things like the Russia-Ukraine war disrupting trade flows and changing that dynamic. So I think going forward and looking at this sort of more global view, we see out to 2025, past 2025, we see really, really pretty positive backdrop here. I think we're going to have some supply headwinds in Europe with the beetle kill issues and potentially some other harvesting regulations that we do see out of Europe. At the same time, likely further rationalization in Western Canada. And so overall, we think that supply network is shrinking a little bit. And at the same time, it's this it's these overwhelmingly positive demographic factors, this concept of urbanization, in the environmental considerations around green building, this mass timber view and really looking towards the future of building with wood. We think that the outlook's just immensely strong, and we're optimistic about what the future holds. I think now we're going through a little bit of a correction here, a little bit of a cooling off from some absolutely stellar years, but we remain really optimistic about that medium to long term view of the industry. And I think personally I am, and definitely I think Canfor as a whole, just really excited about the future of what the industry holds. That's all I've got, and so happy to take any questions that anyone might have.
Thank you very, very much, Chris. Indeed, a stellar presentation indeed. Super interesting and very well researched. And I'm glad to see that there is this type of thinking in this industry and deep level analysis, and that Canfor has invested even in a market intelligence division, because I believe you have to combine the gut feeling with the quantitative. And we will now be opening the floor to Q&A. So at the bottom, there is a Q&A button. Please press that and you can submit your questions to Chris. Chris, you're a very popular speaker. We have 7 questions immediately. Let's take it from the beginning. Jeff is asking, what's the effect of Wall Street firms purchasing single family and multifamily housing?
Oh, that's a spectacular question, actually, Jeff. This is something that I have been watching closely. I think the important thing to remember there is that anytime you're talking about Wall Street, you're talking about returns. And when returns are there, Wall Street is there. When returns are not, Wall Street is not. And so I think, if the fundamentals are there for the returns, and that's what we were seeing during the pandemic, right? We were seeing those, and over the last couple of years, I think we were seeing those increases in house price. we're seeing this, this need for single family housing and this ability to have that single family for rent. So I think for sure it's going to have its place. And I also think it allows us to, again, tap into some of that latent demand that we were talking about, that's maybe that fringe affordability. And so I see it as being very strong. But again, I think the only reservation that I have there is if we see that financing getting off sides, if we see their ability to get that, that proverbial 7% return on their investment diminish, then I think you could see that liquidity drive really, really quickly. So I think it'll be an interesting one to watch. Very new still.
The next question is from Edward. Welcome, Edward. Good to see you. He's wondering, what's your thought on the future development of massive timber homes in the US?
Absolutely. So yeah, we are really optimistic about the future of mass timber. I think it certainly has a place. And we see it in residential construction, we see it in multifamily. Our view is that it's growing every year. We align, I think, with some of the studies that SLB has done and FEA have done around mass timber, and I think we agree with that, generally speaking. I think the view of mass timber really impacting the supply demand dynamics happens probably, past 2025 as we approach 2030 and beyond. I think that's when you'll start to see that really, more significant adoption that moves the needle, I think, a bit more.
The next question is from Hani. Hello, Hani. He's wondering, do you expect Canadian export volumes to increase in the foreseeable future to the Far East?
I think that's a demand story, right? And not to mention a supply story, but yeah, certainly a demand situation. I think with the reopening of China there, the property backdrop that we see in China is, troubling to an extent. But I think I think generally speaking, we'll see some favorable initiatives there. We'll see some return of that demand. And so I think with the demand returning, you'll see some potential supply increases to the region for sure. Now, it remains to be seen where that supply comes from, right? I think with the current geopolitical situation that we've got going on, in the ability of Russia, for example, to supply a lot of fiber to the region, that trade lane remains to what happens there remains to be seen.
Nikki is saying, thank you, Chris. Great presentation. So it's not really a question, but wanted to forward that to you.
Thanks, Nikki.
The next question is from Casa. I hope I'm pronouncing that correctly. In your last slide, you mentioned that supply is tightening with increased demand. To what extent do you think prices may react to this?
Yeah, so for sure, and I could have referenced that. So, let's talk about it in kind of two different segments, right? We've got the current headwinds that we're seeing, and we've got this 2023 scenario, maybe early 2024. I think generally speaking, we have the ability to supply demand in the market, potentially oversupply demand, like you were saying earlier. And so price-wise, I think that that generally guides pricing to that high-cost jurisdiction floor, right? Like you'll see mills hit a floor and sort of react or pull back volume from the market accordingly. And so I think in the near term, I would suggest that pricing sort of hovers around that high cost jurisdiction, whatever that cost curve may be, and we sort of see it bounce off that floor. Now over the longer term, I think that we start to see this certainly stronger dynamic for pricing over that 25 and plus. And so that's tighter dynamic of demand supply in that increased capacity utilization in all commodities, right? It doesn't matter what it is. As soon as you start increasing that capacity utilization of your available supply basket, you're going to naturally have higher pricing. And I think that's probably in the cards for lumber as well over the long term.
Jean-Francois has a question. Welcome, Jean-Francois. Good to see you. He is wondering, what is the cost of production? How does the cost of production compare between BC and the US South? Is this something that you can comment on?
Yeah, so I can comment on from the regard of it is certainly higher. I think your fiber is more expensive in BC. Your labor costs are higher. So just generally speaking, you've got a higher cost curve in BC as compared to the US South. And so yeah.
The next question is from Marcus. How big is the consumption of engineered wood products, and what is its effect on the lumber market?
Yeah, so for that, I think we prescribe to a lot of the work that SLB has done and that FEA have done in that. I think looking out again past 2025, more into 2023, we think, overall there's probably, between 4 to 6 billion board feet of incremental demand that we're not capturing today because lumber is not participating in those structures. We think that's certainly in the cards. Probably the 4 to 6 billion board foot range. But I can't stress enough. I think we need time for that adoption to happen. So we're looking a bit outside of our normal forecast range for that kind of
product. Okay. Brian is wondering how much does foreign exchange rates affect your willingness to export?
Yeah, so I think obviously it's got a major impact, not necessarily on our particular willingness to import, but what we look at and what I try to pay attention to personally is I look at delivered cost curve. So pick a market like Atlanta, Georgia. For example, you can rail in from British Columbia, you can get Eastern Canadian supply, you can send a truck over from Mobile, Alabama, or you can get some volume right off the port there in Savannah, Georgia, and away you go. And so when I look at that foreign exchange rate has the ability to significantly sort of address that backdrop because, companies are in business to make money, right? So as soon as that curve sort of gets off balance, which is impacted by that exchange rate, I think you'll see that natural inclination to not maybe just throw volume at the situation if you get offsides. So I think it's certainly something that folks pay attention to and has an impact.
The next question is from Ahmed. Hello, Ahmed. Good to see you. He is wondering, what do you expect from the Saudi market, and is this a market that North America wants to participate in?
I think generally speaking, we see it as an emerging market. We see faster adoption. When you look at the Middle East, North Africa in general, your per capita usage rates of lumber per person are quite low. Compared to some of your more developed countries. And so I think we're looking for that region to be a significant player in the lumber industry, over the next decade. And certainly I think that the industry will be there to support that increased demand for sure. Be an interesting exercise. I started my career in offshore, so definitely have an affinity towards those markets.
The next question is from Michael. Warm welcome, Michael. Very good to see you. Thank you for coming. He is wondering, what's your view on the future of the South American lumber output on the international markets?
Yeah, so this is an interesting one. I wish I could give you a bit more detail here, but it would need to educate myself more to give you a good responsible answer. But I think it's interesting, right? When you look at certain applications, when you look at fencing, when you look at the ability of those markets I look at the fiber basket, right? The fact that the rotation of that fiber basket can be so much faster. You look north of the border in Canada and you're on 50-year rotations. Whereas if you're closer to the equator there, I think, if we see species come out of there that are denser in nature, that have the that structural capability, I think that South America could certainly have a great impact on the international market overall.
The next question is from Dominic. How do you see lumber capacity investments in the US South continuing over the coming 5 years? And will it keep the current pace will it keep the pace that it previously had?
Sure. So, I see continued opportunities throughout the U.S. South. I think that overall we will see continued growth. Will it be at the pace that we've seen over the past few years? We've been absolutely scorching. So I don't necessarily see it, keeping that same pace. And I think, touching on sort of the raw material aspect of what's available out there too, the fiber basket remains overwhelmingly positive. I think recently we've heard of regions that are under a little bit more stress than others in the United States, throughout the U.S. South. But in particular, I think that there are pockets that are very favorable and will continue to be favorable. And so I think there is room for more investment, probably not at the same pace that we've seen over the last couple of years.
The next question is from Andrew. How do you see the trend of large Wall Street firms and large corporations buying forests for carbon credits instead of wood products for long-term supply?
I from a personal perspective, see this as definitely an issue, I think, going forward, right? And I think, though, it's important for us to, and Andrew, I think it's important that we educate better as an industry, right? Like, we've got to be in the public sphere more. We've got to educate around, what do these carbon credits do? How do we work with these industries to help them understand carbon capture, to help them understand, that when we do harvest these trees in this fiber basket, that we're storing the carbon in the buildings that we construct. And so is there a place where we can manage sort of that interface between carbon credits and harvesting fiber in sort of the most optimal way possible for, not only returns for Wall Street, but just general humanity? I think is the important thing to recognize.
The next question is from Jeff. Thank you for an excellent presentation. Will this be available for review? Yes, Jeff, it will. This presentation will be uploaded on www.timber.exchange, where you can view it retroactively. The next question is from Richard. Do you foresee any potential impact from the import of European lumber?
Yeah, I don't see a particular impact from the Buy America. I do think that, when you look at the federally funded infrastructure projects, they tend to be more in the non-residential space. So, you'd be looking at things like concrete forming packages, etc. So I don't see, a massive impact there. I think that looking at the new home market, that's where that's going to be sort of the key driver of that European lumber exposure to the United States. So no, I don't see a huge impact there.
And the last question for today is from Marina. Chris, you expect that Russia will reduce its lumber supply by 12 billion board feet by 2025. Can you explain the big reduction?
Yeah, I think when we look at it, generally speaking, I think investment in the region is waning. When you look at the ability not only of them to expand, but even to maintain the current volumes, a lot of that fiber basket sits in the far east of Russia. And when you look at the infrastructure there, I'm not sure that we're convinced that it will facilitate, the sustained production that we're seeing out of Russia. And I think, continued investment in the region waning. We're seeing, firms leaving the region, after the conflict there. And so I think there's a period in time where over the next couple of years, with that investment leaving, with the lack of net new investment and, stifled infrastructure sort of as you move into the far east of Russia, I think that's where the storyline that we paint there is. But again, that's a very, very tough region to get a read on in any specific terms. So it'll be something that we're watching closely.
We have one more question from Intars. What's the potential for Central European and Scandinavian export volume trends in 2023 and the competitiveness versus North American producers of softwood commodities 2x4 based on raw material development trends in Europe, which tend to increase, especially in the Baltics, reaching world records for sawn logs.
Yeah, certainly. So I think that we will see pressures on the cost curves there. Again, I'm going to go back to, I think that this is a demand story. So if the demand is there, we will see that, we'll see sort of that supply come in to facilitate. I think even with a little bit higher cost levels, they'll have the ability to participate in the market. And I think, still at a reasonable return level as well.
And that was all the questions from the Q&A.
Yeah.
Chris, thank you so much for coming on and sharing your very in-depth insights. It's been a true pleasure. And we hope to have you back in a year or so to look to understand what's happening then and the future going forward.
Yeah, thanks again for the opportunity. Really enjoyed it, Amir.
Our pleasure. Thank you so much, Chris.
Thanks. Bye.
And if you have any questions for Chris, you can send them to me at amir@timber.exchange and I will forward them. Please do check out www.timber.exchange to learn more about our company and of course also Canfor's website. Until next time, which I believe is on the next webinar is on the 28th. I'm not sure if that's a Wednesday or Thursday, but we have the sales director of Cetra Group and sales director of Pfeiffer Timber in a Swedish mill and a German mill, both coming on for a joint episode to describe to you what is happening in Scandinavia and Central Europe. It's going to be another really interesting episode. Thank you everyone for attending today and see you next week. Thank you. Bye-bye.